Hey everybody, it's Mike over at Taxes and Bricks. Well, I'm on the go again. Just trying to make the most of my time in the car. Welcome to episode 34. 34. Wow, I can't believe it. Episode 34. Today we're continuing our discussion about withholding. So this is withholding part 2. Quick reminder, if you like this kind of content, don't forget to hit the like button. Definitely subscribe and share our content with your friends. You can also leave a comment too, a question down in the comment section. I definitely answer all of them. Going to take a quick second here and throw up a quick disclaimer because, again, taxes, got to pay them lawyers. So sit tight. This video is rated TAX and contains occasional ramblings, mild attempts at humor, self-deprecation, irreverence, brief numerical examples, and adult tax and accounting advice that may not be suitable for all taxpayers. Viewer discretion is advised. Before following any of the advice in this or any of our videos, you should always consult with a tax professional. Thank you. All right, so thanks and welcome back. We're talking again about withholding. And today I'm going to focus a little bit on federal withholding. So I think it's important when I have these discussions with somebody that I want to assess goals, okay? Do you want a refund? Do you want to owe money? Do you want to come as close to zero as we can possibly get you? Do you not care one way or the other? You just kind of want to know what's coming so that you can plan for it. Because I think one of the problems that people will have with, say, either owing money or getting a large refund back is that if it's kind of uncomfortably large in one direction or the other, they might be prepared for it. They might be filing kind of close to a deadline, so they're scrambling last minute, which isn't really comfortable. In terms of a large refund, a lot of people might say, well, why is that such a big deal? Well, I mean, if you think about it, the average person, I won't say lives paycheck to paycheck, but a lot of people do. And if you're struggling for 12 months out of the year and you got to wait till the following February, March, or April, and you get this big refund back, I mean, that's nice, but, it was $5, $6, $7 grand. Split that up over the course of 12 months, and that could mean the difference between, comfort and discomfort. So I think these are all reasons why, withholding is important, and getting your withholding correct is important. So I'm going to talk a little bit about some of the strategies today, because I think, and this is, again, more on the federal side of things. And we're going to talk a little bit about the W-4 form a little bit more in depth. And I'm going to mention again, the concept of the filing status and the number of exemptions, which doesn't really matter. That new W-4 form that came out a couple of years ago doesn't really ask about exemptions. I mean, it asks about children in sort of relation to the child tax credit. But I don't know that that's necessarily relevant, nor is it something that I will usually weave into the conversation, especially in years like 2021, where, I mean, they were giving out half the child tax credit in advance, and so people's tax returns are kind of a little messed up. So if you're having withholding issues, one of the first things you can do is adjust your W-4 form. You can do it pretty much any time, and most employers will let you do it whenever. Okay. So what is a W-4? Well, that is essentially the report. It's usually a one-page document. Probably looks a lot more complicated to fill out than it is. And basically what you're telling your employer or the payroll provider for your employer is your filing status. And they're going to use that filing status with a little bit more of information depending on what you provide on the W-4 form to kind of find where you sit on a chart with your income. And they're going to pick a percentage to withhold. So, I mean, let's just say, I don't know if these are the actual numbers that the payroll companies are using today, but just to kind of use an easy example, let's say you make $100,000 and you're, single. They're going to take your $100,000 and your single filing status, and they're going to look up on the charts, and they're going to say, okay, we're supposed to withhold 15%. So that's what they're going to do. Every paycheck you get, they're going to withhold 15%. Right? Okay, good. All right. Same with the married couple, except with the married couples, the problem there is that the payroll company usually doesn't know at your job that your wife or husband has a job too, and they don't know what they make. There's a way on the W-4 you can kind of tell them, but ultimately, I've used those calculators before. They're kind of complicated, and oftentimes they don't work. So, that is what the W-4 is. The W-4 affords you a couple of other options too. You can list down that you have children, and you can list that down because it will factor in perhaps a subtraction or a lowering of your withholding based on the amount that they suppose you're going to get in child tax credits. The danger there is if you don't get the child tax credit because you end up making too much money by the end of the year, you end up being under withheld. Okay. And that doesn't necessarily mean that you and your spouse make over the limits for purposes of the child tax credit. You guys could make collectively $150,000, but maybe, I don't know, relative passes away and leaves you with a significant inheritance, most of which is in taxable retirement accounts. Happens all the time. And before you know it, you got a married couple who, has a pretty reasonable, modest income, ends up with a huge adjusted gross income that phases them out for all of these things that they had been planning on all year long. Okay, and then your withholding is kind of messed up. I guess in a case like that, if you inherited that kind of money, I suppose you probably wouldn't be that concerned about owing a couple of bucks, but whatever. All right. Also on the W-4 form, you are entitled to customize it a little bit. So you can say you're single, and then you can say at the bottom, and that's line 4C, which is about the last line that you fill out information on the W-4. You can say I'm single, but I would like you to withhold an extra $250 per paycheck, or $600 per paycheck, or $1,000 per paycheck. Well, why would you do something like that? Well, first reason you might do it is maybe your payroll taxes just aren't, you can't figure out why, they're just not high enough. Every year you keep owing money, keep owing the same amount, $5,000, $10,000. So you just look at it and say, well, I know I'm going to owe $5,000 or $10,000 because historically that's what I've been owing. So I'm just going to take that at the beginning of the year. I'm going to fill out a new W-4 form. I know I get paid, 12 times a year, 24 times a year, 26 times a year, 52 times a year. I'm going to divide the $5,000 or $6,000 by however many paychecks I get. And that's what I'm going to put on line 4C. And what that's going to do is it's going to take that percentage that they normally would take based on where you are on the chart, and it's going to add that amount to it every week or every 2 weeks or every month or however often you get paid. And that's how much you're going to withhold. And hopefully that fixes the problem. Okay? That's kind of easy if you owe the same amount every year. It's pretty consistent. If your situation fluctuates, your income's going up, it's going down, you're owing, $5,000 one year, $12,000 the next, $2,000 the next year, you get a refund, whatever. Really, it's not going to work. Okay, you're gonna swing wildly in one direction or the other, and the likelihood that this course correction that you're making is going to be correct is probably pretty slim to none. Okay. So if you can't kind of come to a standard amount that you want to have withheld, okay, and you've sat down with somebody and kind of figured out, that that's really not an option, then there's another method, okay? And I call this kind of method the sort of hybrid approach to withholding. And that's adjusting your W-4 because clearly there's something wrong with it, okay? But if there's clearly something wrong with it because of external factors like random income that comes in, maybe a small business that's cyclical, does well one quarter, doesn't do so well the other, maybe you've got investments and your investment advisor actively manages your portfolio and sometimes generates no capital gains in a quarter and sometimes generates a lot of capital gains in a quarter, then you can kind of take this hybrid approach where you can adjust your withholdings a little bit such that, maybe more maybe less, more is coming out. And then you can make estimated tax payments, okay? Okay, well, what's an estimated tax payment? In your head, in many people's heads, they think you got to sit down quarterly and figure out what your taxes are and file them 4 times a year in addition to the one time that you got to file. And I don't know, I have never done any studies or research on this, but I have a feeling that people think that. I mean, I've heard it. I've heard people say, I don't want to do my taxes more than once a year. Why would I want to file quarterly? That's not what it means, okay? Filing quarterly is one of those terms where I think that's a bit of a misnomer, okay? I like the term paying estimated taxes quarterly, okay? And it is exactly what it sounds like. You are just kind of estimating what you think you might owe that particular quarter, and you're sending it to the government. If you've ever paid a bill, okay, it's just that easy. You mail them a check. If you've ever paid a bill online, it's even easier because the IRS Direct Pay website will take payments online directly out of your bank account. There are even third-party sites that will let you pay your taxes with a credit card. I mean, they charge a fee, so I don't know that I would do that, but they're there. So you can certainly go to like officialpayments.com, or I think there's one called pay1040.com or something like that. They're not government agencies, even though they might look like they are. They're not government agencies. And they may be kind of sanctioned by the government loosely, but you can even pay with a credit card if you don't want to pay with EFT or by check. All right. So with an estimated payment, it also, by the way, doesn't have to be every single quarter. So, for example, I had a client call me up. They had this kind of one-time event that happened in the middle of the year last year. And it was a lot of income that came in. They knew they were going to owe money on it. We agreed they were going to owe money. They wanted to just settle up with the government for whatever we thought they were going to owe for that particular quarter, for that large tranche of income that came in. And so we figured out how much the tax was going to be. They mailed in one check with a voucher, and they didn't send any more money in for the rest of the year except for their withholdings from their W-2s. And that was okay. Nobody came knocking on their door and said, hey, Bob, Mary, you gave us a check in June for your estimated payments. Where's your check in September? Where's your check in January? They don't do that, okay? You start and you make one estimated payment because you feel like you need to, and you don't make the others, no big deal, okay? That's totally fine. You also don't have to have been paying all year long in order to make an estimated payment. You can make one at the end of the year too, if that's happened to be the quarter where you end up with money where you think you're going to owe. Okay. So estimated payments is not a big deal, and you can make them to the Fed and you can make them to the states. Okay. So it's not just the federal government that will take your money. All right. It's an option, and it's not that complicated, and it shouldn't be scary, and you don't have to sit down and file your taxes 4 times a year, plus the time that you do them normally in the normal tax season. That's not something you have to worry about doing, okay? The bottom line here, I think, is that, I said it before, I think, in part 1, beyond the whole concept of being surprised and not being prepared or having a situation where it's just uncomfortable, you can be penalized for owing too much money every year, all right? And those penalties tend to start kicking in when you start owing a little bit more than $1,000 or more. Penalties aren't serious if you only owe a couple of bucks. But listen, I don't care if it's a $1 penalty or I don't care if it's $10,000 in penalties. Penalties that can be avoided should be avoided. And to the extent that you can, I would say, that's something that you want to consider trying to do. Sit down with a tax professional, sit down with an accountant. There are some resources online. There are free resources at the IRS website to help you figure out your withholdings. I think, working with a professional, people like myself, will have a little bit more of an insight into these kind of things than, say, the average calculator online would. I think it's a holistic approach, though. I really do. A lot of times people will focus on, one thing about their tax situation and try and craft their entire withholding scheme on that one thing. I see this a lot with business owners. I'll get a married couple will come in and maybe they both have jobs, W-2 jobs. And maybe, the husband has a side gig or the wife has a business or maybe one of them's a real estate agent or something like that. And they got this extra money and they're trying to craft their entire withholding scheme based on the extra 30 or 40 grand that comes in from this one job or this one sort of side business. And I have to remind them that it's everything. When we do your taxes, we take everything, every dime, dollar, and Deutschmark from every stream that you have. It all goes onto the returns, and that's how we figure out where your income tax is, and that's how we figure out what your effective rate is, and that's how we figure out what your marginal tax rates are, and that's how we can kind of determine whether or not you're going to need to either send estimated payments or whether you can up the amount of withholding that you got on your normal W-2 jobs in order to account for the extra money that comes in from this, side business. Anyway, I think that's it for withholding on the federal side. It's, like I said, it's fixable. If you're owing money every year, use some of the techniques I just talked about. Kind of take a look at it. Maybe add some more to your withholdings from your W-2 job. Maybe make some estimated payments. You can avoid penalties. You can avoid some surprises. If you overpay and you screw up, you'll get it back. Don't worry about it. It'll come back to you. Might take the government a little while since there's nobody home right now, but it'll come back eventually, okay? If you screw up in the wrong direction and you end up with a massive refund, big deal, okay? Better than owing. It's better than owing when you don't expect it, and it's better than getting penalized. All right. I think that's it for today. Thanks for watching. Again, don't forget to like, subscribe, share our content with your friends, leave a comment. I read and respond to all of them. Thank you guys for watching, and we'll talk to you soon.